Hello and welcome to the latest Bull v Bear video from Kepler Trust Intelligence with me, David. Today I'll be laying out the bull case and the bear case for Bellevue Healthcare, which has the ticker BBH. We'll start off by giving you a little bit of background on BBH itself. The investment manager is Bellevue Asset Management, the UK arm of Bellevue Group, which is a Zurich-based investment manager with £6 billion of assets under management. With £5.7 billion of that in healthcare strategies, Bellevue is one of the largest healthcare investors in Europe. Now, BBH itself is managed by Paul Major and Brett Dark, an experienced duo within the healthcare sector. Paul's been running the company since its IPO in December 2016, with Brett joining him 8 months later. We'll come back to Paul and Brett later on in the video. There is a dual investment objective, which is to provide shareholders with both capital growth and income. The return objectives are to beat the total return of the MSCI World Healthcare Index on a rolling 3-year basis and to try to generate a double-digit total return per year over rolling 3-year periods. As its name suggests, BBH invests solely in the global healthcare industry. This includes companies within industries such as pharmaceuticals, biotechnology, medical devices and equipment, healthcare insurers and facility operators, drug retail, consumer healthcare and distribution. It also encompasses tech stocks whose products or services support, supply or service the delivery of healthcare. The first thing to note here is that it is a very high conviction fund, which essentially means that it invests in a small portfolio of companies. That's a maximum of 35 holdings. In terms of Paul and Brett's process, they first start by analysing each healthcare subsector, assessing their relative valuations, growth prospects and regulatory outlook, as well as the risks and opportunities associated. They then use their own proprietary screening tools to identify the most promising candidates for inclusion into the portfolio. The next step is to do a fundamental analysis of the investable universe, assessing how attractive each subsector is, as well as the expected returns, downside risk and trading liquidity in each potential investee company. There is a risk management framework which is provided by Paul and Brett as well as the independent board of directors of BBH. The team highlights its sell discipline here. The share price and valuations of each portfolio holding is continuously monitored and checked against the manager's views on valuations and expected returns. Now we'll move on to the bull case and the bear case, starting with the bear case. There is one point to make here quickly first off, which is that by investing in BBH, you only get exposure to one specific sector of the stock market, which is healthcare. Now, judging by its name, this might be obvious, and it's not necessarily a bad thing, but it is worth bearing that in mind. You can see BBH's exposure within the healthcare sector here. Now, healthcare is quite a broad sector, and the good news is that BBH is well diversified within it. Still, many of these subsectors within healthcare tend to suffer volatility for different reasons and at different times. Pharmaceuticals companies, for instance, often have to put up with debates on changes to drug pricing during election campaigns, while biotechnology companies' share prices' success often hinge on binary outcomes of drug trials. Certainly in recent years, BBH's performance has been held back by investors' myopic focus on large cap technology. In the first 6 months of BBH's 2024 fiscal year, its benchmark, the MSCI World Healthcare Index, was up 9.7% in sterling terms, which is lower than the 13.9% gain from the broader MSCI World Index. In BBH's full year 2023, the MSCI World Healthcare Index underperformed the MSCI World by 14.8 percentage points, its worst relative annualised performance over this period in the 23 years for which comparable data is available. Of course, we'd hope that someone considering an investment in BBH is doing so to get specific exposure to the healthcare sector, and that it won't account for a large part of their portfolio. Another thing to note here is that BBH is very geared towards the US stock market. As you can see here, it has around 98% invested there, with 1.6% in China and the rest in Europe. BBH is also biased towards the mid and small cap part of healthcare. Again, the market's infatuation with large caps in all sectors of the market has proven a headwind for BBH, as it doesn't own some of the larger players in the healthcare sector, such as Novo Nordisk and Eli Lilly. As you can see in this chart, relative performance of mid-cap healthcare is at extremes compared with historical norms. As ever with investment trusts, gearing is also something to look out for. Now, generally speaking, Paul and Brett aim to run the trust fully invested and with a mid to high single-digit level of gearing over the medium term. As I'm sure our readers will know, gearing can juice up returns when markets are on the up, but they can also amplify losses on the way down as well. That said, it's not always the case that BBH is geared. Paul and Brett do tend to move gearing around tactically, depending both on how they view the stock market in general, as well as the stock-specific opportunities that they see within the healthcare sectors. This has seen them become cautious in recent months given current volatility, and allowed a net cash position to build up in the summer. You can find more on BBH's gearing policy in the latest note on the KTI website, which we will link to in the description of this video. Now we will move on to the bear case, and we'll start with some of the more macro-oriented points here, because it's quite possible that some of the headwinds BBH's strategy has had to contend with over the last few years are starting to abate. The US economy currently looks like it's in a sweet spot, where it's slowing down just enough to justify interest rate cuts, while continuing to grow, and data does not suggest that a recession is on the cards at the moment. That could change, of course. Now, falling interest rates and no recession would be a positive for small caps because they tend to be more attuned to local economies than their larger cap counterparts do. We mentioned not long ago the fact that BBH just gives you exposure to healthcare as being a bear point, but you could also suggest that it's actually a plus for the trust. Healthcare is possibly one of the most structural and enduring trends there is around. First, healthcare is inherently a defensive sector, so if the global economy does fall into recession, healthcare spending will be less affected by people spending less. Think of it this way: if you have a serious medical condition, you're going to get it seen to recession or no recession. If you do decide not to, you're likely to only postpone the operation rather than cancel it altogether. Consider too that societies are ageing and older people tend to be more of a burden on the healthcare system and spend more on healthcare. Healthcare expenditure in the US has been rising for a long time. In fact, people in the United States spend $4.4 trillion on healthcare annually. That's more than the combined GDP of the UK and the Netherlands. Paul and Brett argue that healthcare systems across the world were not designed to manage the type of demand we're seeing today and can no longer cope. Therefore, there's scope for companies offering innovative solutions to improve patient outcomes, and efficiency will see their strong demand for their products and services. Alongside this, innovation is rife within the healthcare industry, and it is flourishing. In 2020, $186 billion was spent on global pharmaceutical research and development, and there were 55 new drug approvals by the US Food and Drug Administration, the second highest number ever. This is at the core of BBH's strategy and what it provides investors with exposure to: a growing and embedded structural theme with innovation at its heart. Of course, we also touched on BBH's diversification within the healthcare sector. Well, it doesn't just invest in drugs. It's health insurance, medical devices, life science companies, among many others. The main attraction of investing in the healthcare sector is the high growth potential and its strong secular drivers. Dividends aren't really a big component of healthcare investing, especially within the small and mid-cap space that BBH plays in. BBH's dividend policy, though, which it pays out of capital, offers investors a way to draw income while taking exposure to the growth potential within the healthcare sector. BBH pays 3.5% of the NAV at the start of the year in 2 equal dividends. This means that the dividend to be received is known at the start of the year, although of course if the NAV falls year on year, the dividend will also be lower. Still, the benefit of this process is that it gives the managers full flexibility over how they manage their portfolio without hampering them with an income target. Finally, I'll bring your attention to the knowledge and experience, not only of the management team, but also the board. As healthcare is such a large sector, you really need people with excellent knowledge of each individual facet of it, and Paul and Brett have exactly this. Paul has been running BBH since its IPO in December 2016 and has been covering the healthcare industry for 27 years. Brett joined Paul on BBH in 2017 and has 22 years of experience covering the healthcare industry as well as the wider life sciences sector. Paul studied biochemistry and Brett has a master's degree in medicine and management studies. Further, BBH's chairman is Randeep Grewal, a London-based ex-fund manager with over 17 years experience of healthcare investment experience, who trained as a vascular and general surgeon and read both medicine and computer science at Cambridge University. Paul and Brett are more optimistic about the immediate prospects for their portfolio than they have been for a while, and we're inclined to agree with them. The imminent interest rate cutting cycle should be a catalyst for small and mid-cap performance to perk up, and the structural trends driving healthcare are going nowhere. With the portfolio trading on a discount of around 7.9%, BBH shares look compelling value today. Thanks for watching this video. Don't forget to check out the latest notes on BBH as well as all our content on the KTI website, and we will see you soon.